Welcome to the Smart Investor Podcast with Portfolio Manager Beyond Dale, the show that takes the guesswork out of investing by bringing you actionable price analysis of the stock, ETF, Forex, and commodity markets. Here is your host, Beyond Dale.
Hello, everyone, and welcome to another edition of the Smart Investor Market Podcast, where smart investors get their up-to-date price analysis and market information. And today we're going to speak about being upset with the market. I was reading an article yesterday where this trader was saying that the movement of the market is irrational. It has no business going up, and he was shorting the market. He actually started shorting the market about 3 weeks ago, and he exited his positions for a loss and was frustrated with the market and was saying that the market movements are irrational and the market movements will hurt a lot of people. And his argument was that what is happening in the markets now is completely irrational, and the markets has no business going up. But really, is that true? We're going to take a look at that and explore the notion of the market being irrational. We're also going to take a look at some of the bigger movements, percentage movers of the day. We have LG Display, Under Armour doing fairly well, up 5%, LG up 5%. We have PayPal Holdings up 4%. So we're going to take a look at some of these positions. We're also going to look at the market action, what the markets are doing today across the board. Okay, taking a look at the Dow. The Dow is currently up 135, and according to the commenter yesterday, or the author of the article yesterday, that is completely irrational. The Nasdaq is up 32, and the S&P 500 is up 11 or 0.44%. The markets, looking on the chart structure of the markets, the major market indices, we are hitting new highs again for the day and new highs again for the week. There's not much chart resistance above us. The market has blown through the 23,000, and I guess the next psychological area or psychological point to look at is the 23,500 on the Dow. Gold today is down, and gold is down fairly large, down 0.68%. Crude oil is up 14 cents, and the US dollar index is up today also. Taking a deeper look on gold, we see that gold surged last week. We had a good move to the upside in gold. Market was flirting with the $1,300 level, and now the market is pulling back, and it will be interesting to see where this market pulls back to. It's currently at around the 1280 or so level. Support in gold is at 1260 and also down to 1240. Those are the support points to look out for in gold, because I believe that gold is in a longer term bull market, and this pullback that we're seeing is just an opportunity for investors to get long the market and establish positions, because gold looks like it will be heading higher from here. If we start to see gold break down below $1,200, I will reevaluate that notion. But for now, the market is looking fairly bullish. US dollar index is up. Market is at 93.66. US dollar index, it's facing heavy resistance in the 94 level, and we will see if the market can hit that level and then blow through that level, and will the buying pressure essentially take the market above 94 And that if that does happen, that would be fairly bullish for the US dollar index, and we could see a move up into the 95 and 96 handle. Euro currency market, it's current at 118 on the futures market, and support in the euro is down at 117.88. Okay, so that is what's happening across the different markets. Commodities are generally lower. We have a slight pullback in the copper market, down 0.03%. Silver is down 1%. And wheat is down 0.81% today. So we have some fairly weakness in the commodities after commodities saw a huge move up last week. We saw the market move up last week, which was fairly bullish for commodities. Okay, so taking a look on the notion that investor was saying that the market is irrational, and I believe the article was written out of frustration that he had losing trading positions, but the market currently is moving to the upside. The market is trending to the upside. So I would not advise anyone really to be short in this market. That will be completely ridiculous unless you have a boatload of capital just to waste. But this market currently is moving to the upside, and we are seeing some strong moves to the upside in the market. And the posture that I am recommended for investors is to tighten your stop losses under the market. Let the market continue to move up and give you profits. And be cautious, because the market can pull back at any point in time. But that does not mean you should trade the pullback. Trading the pullback goes against the market-led approach principles. If you are not familiar with the market-led approach principles, go to smartinvestorcentral.com and download the 5 simple steps to the market-led approach principles, because they will keep you on the right side of the markets and will give you the best chance to see sustained portfolio growth over the years. So one of the principles essentially is follow what the market is doing, in terms of do not fight the market. The market is currently trending to the upside. So fighting this market is definitely not something that I would advise investors to do. That could be a recipe for the disaster. Yes, today may mark the very top of this market, but then again, chances are it will not. And this market has been going up ever since 2009. So why would it today be the day it will go down? I'm advocating to tighten stop losses under the market, so you have your exit strategy in case this market really turns around. But definitely shorting the market is not a good idea. So whatever that investor was saying, the markets are not irrational. The markets are doing what the markets do. And during the latter part of bull markets, we normally see this very phenomenon where the market kind of goes parabolic. The market really surges up and surges up strongly, and that surge can last for a number of months. So shorting this market is definitely not something you should be looking at. Okay, looking at some of these percentage gainers, I was looking at PayPal, and PayPal ticker symbol is PYPL, and most folks know PayPal. PayPal has surged essentially to a new high this week. We're seeing the market surging, and the market moved roughly from closing at $67 up to $70 dollars. So a fairly strong move up in PayPal. The market is up some 4.28%. I rate PayPal at this point in time as a hold. PayPal is definitely a hold. Where is the exit point in PayPal? If the market dips below the $63 level, I'll be looking to exit this market and take my profit. Another market is LG Display, and the ticker symbol is LPL. The LG Display, you see them all over the stores in terms of televisions. I actually do have a LG TV in my home, but I am definitely not a big fan of LG stock. The high in the stock was above $30, and the stock is currently at the $13 level. The structure of the chart is we're seeing in the short term, from it bottomed in 2015, 2016, the market is seeing a series of higher highs, higher lows, but not a very good chart structure. If I was holding this stock, if I was long this stock, I'd look to be getting out if the market traded on the would trade under the $12.50 level. But I'm not a fan of the chart structure here. I'm not a fan of this stock. And this is a stock I would definitely get rid of. Even though today it's up 5.69%. This is something I would get rid of if I was trading for a longer term type move. If you're day trading this, well, you can ride the momentum upwards. Under Armour Inc., a ticker symbol for Under Armour is UA. The market today is up. We see the market really up, and it's up 5.26%. Looking at the chart structure in Under Armour, I've gotten a lot of questions about this stock, and looking at the chart, you see a series of lower highs, lower lows. This is a poor structured chart, and the market is telling me that this is something I would not want to be owning. We see a series of lower highs, lower lows, negative chart structure in a surging overall market. I would be looking to sell rallies in this market and be looking to exit any positions. It's definitely not something I'll be looking at. Okay, so it's the end of the week. The markets are not closed yet, but we are looking like we'll be ending the week fairly positive for stocks. For the US dollar, it has been a fairly positive week also. And for the commodity index, it has been mostly a negative week this week. So that is it for the markets. Yes, we're going to look at next week. We're going to be looking on some more stock positions. And as always, our whole point of this show is to highlight the profitable market opportunities for you based on good market structures. And that is very important. Thank you very much for listening to the podcast. As always, if you want some more information on the market-led approach, go to smartinvestorcentral.com and download that free report. Thank you very much for listening. My name is Beyond Dale, and I'll see you.